So it's a new year, and with that comes a lot of changes that can impact your business. The IRS Standard Rate has increased from 67 cents to 70 cents for 2025. This impact might seem small, but it's actually super important for you to understand the implications. So what exactly is the IRS Standard Rate? It's the rate set by the IRS to determine the deductible costs of operating vehicles for work. It's designed to cover expenses like gas, maintenance, and even depreciation. When the rate goes up, like it just did, that's a sign that the operating costs for vehicles is going up. Staying aligned with the IRS standard rate means that your employees will receive fair and equitable reimbursements. They'll also be tax-free. If you reimburse up to the IRS standard rate, all those reimbursements are seen as exactly that, just reimbursements, and they won't be taxed as income. Now, if you manage a fleet of company cars, this increase shows the growing costs of car ownership, gas prices, maintenance, and beyond. For some businesses, this might be a good time to explore alternative models, like reimbursing employees for using their personal vehicles. It's a flexible way to reduce the administrative and financial burden of owning and operating a fleet. And if you're already using a reimbursement program, then you're way ahead of the game. These programs like Favor, or fixed and variable rate reimbursement, tailor reimbursements to align with actual costs, making them a smart option for adapting to changes like this new IRS standard rate. Favor is the only reimbursement program that can actually allow you to reimburse above the IRS standard rate without that difference being seen as income. So those reimbursements can be quite generous and tax-free. It's a super effective way to retain top talent, and businesses that operate a Favor program typically see a very high employee satisfaction rate. Whether you're running a fleet, reimbursing employees, or just tracking mileage for tax purposes, this IRS rate change is a good reminder to check your vehicle policies and expenses. Take a moment to see how these updates could impact your business and find the approach that works best for you. All the best in 2025. Happy New Year.